All right, a bit of a bloodbath. Everything down, markets, commodities. I mean, the only thing that was up really was the dollar and yield, but otherwise everything down. We will take a look at every sector. Let's start with the markets actually. Was it the Fitch downgrade? Was that the catalyst finally to pop this massive rally, this complacency? Hopefully, I think we need a healthy correction. I think we need to go to lower lows, although it's a long way down. And actually, we're still in an uptrend even after today. Let's take a look at the markets. S&P, we closed pretty much on this ascending. So actually, we're still in an uptrend, even in the short term. I do think we're going to go lower tomorrow. I think we're going to go to 444 on the S&P. But, you may have a little bounce day. I think it's asking a lot. I think we should have collapsed a long time ago, to be fair. But I think this one, when you have a market down day of 2%, it was just the Nasdaq that was down 2%. But when you have a 2% down day, that's different to a 1% down day. And I think this was long overdue. I think we deserve a minus 3, 4, 5, 6% down day, or several minus 2% down days consecutively to wake everyone out of their trance. Maybe this Fitch downgrade did that, just reminding everyone of the obvious. I mean, you can't really count on these rating agencies anyway. Look at the last recessions, the last market crashes. They're always late to the party. They're all bought off anyway. But anyway, better late than never. So S&P, short term bullish. Technically, you could have a little bounce from here, from this little, but I think I'm going to go low, 444. And then let's look at what the other markets do. Keep going lower there. You can see there are several bounce zones, several layers on the way up. I mean, this has been going up for a while, so it's created itself several little areas to bounce from. And there'll be some dip buying, I guess. But for now, I mean, I think this ascending does count, but no, I think we're going to go lower because this feels a bit different, to be honest. And sometimes you've got to go with your gut. Resistance on the upside remains the recent high, this 459, which actually was marked by a massive bearish engulfing despite the rally after that. Anyway, Nasdaq, similar sort of chart, except we've closed below the ascending already. What's the next support on the way down? Actually, it's the horizontal, which we did bounce off. So this entire zone is support. Yes, we've we haven't closed below this. You can see where this horizontal here. I think tomorrow we're going to go low. I think we're going to go low. And to be honest, if we do go low and we close below this 372-ish zone, forget this gap fill. It's going to be something else. It's going to be a bit of a move low. And I think we're going to go to 360-ish, actually, this sort of zone here. So if we do start to descend tomorrow violently, like pre-market, we're down almost 1%, it's going to be one of those move down to the next level. And to be honest, 360 on the Nasdaq probably equates to the S&P coming down here, maybe even more, maybe hitting this ascending here, which will coincide with this little level. So I just think we're going to go lower. S&P and Nasdaq had huge runs on the way up, and I think we need a bit of a retrace. If we do have that move lower, obviously the Dow Jones will come back down here to this breakout zone. So it made a late pop. That's very nice and cute, but right back down again. Sorry, it was too little too late. And if the big boys, the S&P and the Nasdaq, are going to come down another 2%, Dow Jones has to come down here. And to be honest, I wouldn't be surprised if it ends up hitting this ascending. So that's what I think on the Dow. I'm not even covering the resistance on the way up. I think we're going to go lower. That's how much I think we're going to go lower. Russell, to be honest, look at that, closed far off its lows. So it kind of outperformed, I feel, a little bit. But yeah, if we go lower, then I think we're going to go back down to 190. Nice and simple. The banks, by the way, a bit like the Russell. Look at that. It didn't exactly, I was expecting minus 4% day. You got these interest rates going up. You got the market crashing. And usually the banks are the weakest, and not just with the markets, but also interest rates. But that was surprising, actually. So it was still a red day, but decent, outperforming. But if we do go lower, sorry, you're not going to have green. You're not going to have the banks green if the markets are going down another 2%. I think they will have to at least hit this ascending, the XLF. KBE, what will that do? That will, at least hit this 40 zone, but probably back down to this. This was significant resistance. So very credible support on the way down. So for me, if we do start to crumble, 38 on the KBE, KRE, the equivalent would be Yeah, 45. But to be honest, I can imagine the KRE being weaker and going a bit lower, maybe the ascending. But that will probably take one or two seriously bad days. So we're far from there. But 45 is the first point. Let's just let's extend that a little bit. And let's see. But sorry, banks have to go lower. They're probably structurally one of the worst assets to hold. I mean, look at the bonds, the mortgage-backed securities. These assets they hold as interest rates go up, they are looking very dangerous indeed. Okay, so that's markets and banks. Let's look at interest rates. Always for months, the most important asset class. 1 year sideways, nothing too exciting. But for me, this will go, it's always sideways up. So wouldn't surprise me if we start to make new highs any day. The 2 year sideways, I'll just say it now. The longer dated yields, it's the 30 and the 10, especially the 30 that were up. The twos were just the shorter sort of yields were just sideways. So that's a bit surprising. I'd expect it to be green on a day like today, actually, but just unchanged sideways. The 5 year unchanged sideways, although it did pop a little bit there, making a new high. So that was the first green one. 10 year, look at that. That's significant. It's still above 4%, popped its head above this 4.10. Nice close. Tomorrow, do we close above 4.10? Maybe. If we do, probably the same sort of conditions as today. The 30 year definitely popped its head, closed here, touched 420, very significant. I thought the 30 year would take a while to get up here. It could happen, I don't want to say this week, but in the next couple of trading days, 3, 4, 5, 6 trading days, we're hitting 4.4. This is scary. This is significant. So this is probably what spooked everyone. And it makes sense, yields going up. So let's look at the dollar. That also went up. So that continues its rally since that flush. Look at this. It tagged this resistance. Let me move it out the way perfectly, absolutely perfectly. I don't think that's by chance. So nice to see the technicals working. That was my next level. Where's the next level? I've got it all the way up here. Why? Because of this descending. Let me see here. Let's just move it there and make it a bit more accurate so it coincides with this recent high. So if we go higher, I'll put this back here, then, and look at this, it coincides with this one here. So for sure, for me, it's the 104-ish zone. So let's see, that'll be the next resistance if we get there. To be honest, I wouldn't be surprised though. The recent high here probably also acts. So let me just do this as a general area and make it a little bit bigger, because you can't just go past here when it failed the last time just because you want to get here to, I think, it would probably fail just at 103.5. And then when you zoom out and look at it later, it'll fit this descending perfectly anyway. So I'm going to say 103.5-ish for, and also there's a time element. So if it takes a bit of time, it'll probably coincide perfectly. So 103.5 for the next level on the way up for me. And but who knows, it could reverse from here because we have tagged resistance, and this is probably should be the strongest resistance so far that we've met. It's been a nice rally, but it's been quite a lot. And we've seen interest rates go up and the dollar not go up. So but today's strong day, up 0.7%. That's pretty decent. So, and it closed near high of day 2, so it doesn't look weak, that's for sure. It just happens to be at a resistance point that I identify. Let's just look at the currencies real quick that make it up. This was yesterday's prediction whilst I was talking, but yeah, you can see we've already closed below this mini ascending. So support on the way down for me just here, and you can see why. Just this little zone, I don't expect it to be very strong resistance, but I'd expect a bounce here if we do go there. And if we do, to be honest, what I'd drawn before, just move back down and then down into this area, really. That's if the dollar keeps rallying, the DXY keeps rallying, because of other currencies too. But we did just pop our head up. But if it was going to bounce, it would have been today. And look at this drop here, close below. So to be honest, I favor another move lower. Yeah, that's the euro dollar. It's pretty. Oh, look at this though. Dollar versus Japanese yen. That's also strong. So that's two out of the three major currencies that make up the DXY. With reasons to favor more dollar strength. Look at this. I mean, I said, really this bounce here because you come all the way down and you expect, okay, that's a big drop. You're going to bounce, but then it's this bounce here on the 28th. It's just so strong and then continued. Obviously, this is BOJ yield curve control drama, but it just looked like it needs to go higher. Like that's a very strong bounce. So for me, and I said it last time, it needs to visit here because it's so strong. And after today, look at that. Today's candle closed a high of day, green hammer. It's going to go to 145. It's going to go test 145. We'll see what happens. It kind of looks like it wants to break out above it too already, in my opinion. So this is also bullish the dollar, euro. The fact that we closed below that, that's bullish the dollar, bearish the euro. Pound versus the dollar. Look at that. That's and even if this one isn't correct, let's look at this one here. Oops. Let's look at this. Oh, yeah, come on. If we were to draw this one here, yeah, it's kind of close below it. So where do we go? We probably hang around at 126 for a bounce, that last low. And then let's see, if we close below that, we have to keep going down. But remember, zoom out, look what we've done. We've come from parity almost to all the way to 1 point. That's what is that, 30% bounce or something? That's huge in currencies. So let's go back down. I think the strongest support on the way down that I can see so far is this zone. I'm just really looking at it now. I'm freestyling this, but obviously you won't go down in one go. A little bounce here, a little bounce at 123, 124, and then 118 should be strong. But now that's looking at a bit too much, and I'm hoping that the dollar DXY crumbles actually even any day now because I want my metals to go higher. But I must admit, the pound weak against the dollar, the euro weak against the dollar, same sort of chart as the pound, and the dollar very strong against the yen. So that explains the DXY going up. And although we've got resistance here, to be honest, I can imagine it going all the way up here. So yeah, dollar looks strong still. All right, let's look at commodities, which obviously took it in the face today. Copper, not the worst, but down, down. Yeah, it's still kind of in an uptrend, just punched its head above here, a bunch above this 3.954. It's just that dollar strength, ruined the party. So back down we go. And if there's more dollar strength, especially with the market going down, those two combined almost guarantees copper down. Next support, I would say, is just these two tails here. So 3.78-ish probably will go there if we have the same sort of move tomorrow as we did today. Natural gas, this one, oof, just like last time. Not looking great, is it? I thought it didn't really care much about the markets or the dollar or interest rates, but today I think it did, or it's just a coincidence. But look at that, it's weak. Popped below 2.5, closed just above 2.5, but that's the worst closed in a long time. So got to admit, not looking good, natural gas. If we do go lower, this is sending, although it's not well drawn, like a move down to 2.3 should be support. And to be honest, I still expect natural gas to hold out quite well down here. It's so much buying consolidation. It would take a lot for it to break down. So, but let's see, still haven't closed below 2.5 just today, but certainly not the strongest looking chart. Oil, perfect. Yeah, I mean, for me, regardless of today's move, even if it was a green day, 82, that was really my high. Like I thought we'd test 80 from all the way down here. And then I thought, okay, maybe a bit more 82, but 82, 83 is definite resistance. And then look, it's really, as soon as we went above 82, that was it. Yes, it follows the market, it has its own news, but look at this perfectly bounced on this technical ascending. Go to the 15-minute chart, it probably looks a bit better, although it's not perfectly accurate. Let's just perfect it there. Looks good, makes sense. What happens now? I think it needs to go lower. Not only has it had a crazy run, but you know, the market's going down, the dollar's going up, so it needs to retrace. It would be healthy. And yeah, you know, even if the market wasn't going down, I think it would retrace more because it's had a crazy run. But with the market going down, the dollar going up, it's like 3 out of 3 reasons for continued move lower. So let's see if we go back down to high 70s, maybe even all the way back down to 74, and then go back up, and then maybe we can pierce 83. Let's see. But I think a little bit more downside. Still very strong though. Uranium, strong, really, given that the market was crushed and uranium tends to go down the market. That's, I think that's how it goes. And today that's how it went. Uranium stocks also. But look at that, close far off its lows. You know, remember we broke out of this majorly bullish. We were in the mood to break out higher, and it's just this market drop has ruined the parade a little bit, but decent bounce off its lows. So uranium looks very good. I think drops should be bought, especially long term. Very bullish thesis. So uranium red but strong. Gold, yeah. I think we closed below support, actually. I know it wasn't down much. $14 it's something, but you know, given what the dollar's done, given what the market's done, although sometimes the market going down helps the metals, but this was really a sell everything kind of day. But look, we closed below the ascending. I don't know if it's that accurate, but I think even if I was to make it, yeah, that's pretty accurate. You know, we closed below the ascending support. We closed, sorry about this, we closed below the horizontal, even though it's kind of roughly, you know, 1935 to 40, but and also below 1940, which is psychological. It's not very psychological, but for me, we closed below support. Now, obviously, you can rally, and then, you know, 5 days later, if we're going all the way up, you can readjust this and say it was pretty much just on ascending. But for me, it closed below minor support, let's say. So not the best. And if dollar continues, which it looks like it wants to do, then gold to go, you know, back to 1900. That's what it looks like. And then we have this double bottom attempt. You know, if you zoom out on the weekly or something, probably then it looks more like a double bottom. So yeah, gold doesn't look great, but could be worse. And let's see, it all depends on the dollar and interest rates. And to be honest, it looks like continuation is possible. What I am thinking of though is, what if the markets continue to crash, like the banks start to crash? Does gold all of a sudden catch a bid as one of those safety plays? You know, and if it does, do the miners follow? So for now, gold, miners following the markets down. But that's just something to consider. And to be honest, with the Fitch downgrade, you'd expect gold to go up, but we've seen this many times, you know, when gold goes down when it shouldn't. So not the best day, and to be honest, closed below support in my opinion. Silver though, although it was a big down day, minus 2.5%, still outperforming gold. You know, it should be here below 23 to match gold. So, but I think it's on its way down to this, you know, this ascending support zone, so 23.2-ish. I think it wants to get there like a magnet. And I think if it does get there, gold's probably gonna have to go probably into the 20s. So maybe silver's continued downside momentum will push gold a little bit. Yeah, well, let's see what happens, you know, but there you go. So far it's not exactly where gold is. It's still outperforming, but it was definitely down more today. So let's see what happens. If gold goes all the way down to 1900, then silver, that would mean, you know, 22-ish for silver. But silver has been relatively strong. I mean, ever since it's moved from down here, it's quite surprised by silver. It's very strong actually, for the last couple of months, I would say. All right, let's look at the miners. The miners, to be honest, are acting as if gold is at 1900. So, and the miners leading the metals down is not a good look. You know, that's a bearish look. It's forecasting lower gold prices, you could say. Is it because it's following the markets more than the metals are? I don't know. But it is what it is. We're down here. We're pretty much, you know, look at this. We're retesting the descending. That's what I said. Retested descending, but that's kind of the same as the horizontal support. So we are at support. And there's pretty decent support even below, you know, we've got this gap fill zone. But for now, I'm just interested in, let's look at the GDX 29-ish, roughly. That support. So we could have a little bit low of a move. What I'd like to see though is I would actually like to see gold and silver come down a little bit more, but then the miners not come down. So imagine you have gold down 1% and then the GDX is down 1% too, you know, where you've got this exhaustion selling. That's when you can probably play a bounce and sell into the next pop. But I do think that 29 on GDX should act as support. You know, the only way I can see this just go through like butter is if you have a real market collapse continuing and the miners are just following the markets down. Let's see, you know, you can have a real market collapse and the metals start to go up. And then here you go, you have this massive green candle and you zoom out and you look at it later and it was just a massive double bottom. But anyway, for now, miners weaker than the metals, but pretty much at support. They could go down a little bit more. GDXJ, you'd expect it to be down all the way at the bottom, just like GDX, and usually it's weaker than the GDX. A bit like silver. Silver is usually weaker than gold on the way down, but anyway, it's not really impressive. It's still all the way down here. I think support pretty much 34-ish zone, maybe just above 34.5. So I'll leave this where it is. I still think that's correct. To be honest, I think these technical levels have been correct the whole time, so didn't need to move anything. That's the miners, you know, on the way up. Well, prior support, so I guess 36 for GDXJ. I mean, there's been a lot of whipsaw here, you know, down, up, smash down. It's been a roller coaster. And on the way up for GDX 30. But let's see. I probably wouldn't even sell because there's probably a reason that it's going up strong. So the levels are correct. No need to go into it too much. Let me finish with Bitcoin, which, you know, that had a nice little bounce to 28,500. But then look, we had a market smash, so it couldn't continue green. It's probably the best place to hide today, besides the dollar yields and probably the VIX, although I deleted the VIX because it's just a broken indicator. But it didn't get smashed as much as the others. But I just reckon if the market keeps going down, especially the Nasdaq, this can't withstand it and will probably come back down to this ascending 27,000 actually by that point. So that's it. That's the markets. That's my wrap. Very exciting. But I think it's troubled times. I think this might be the market top finally. Let's see. All right. Good luck tomorrow.